The asset management industry is a fascinating case study in the power of disruption. Technology is transforming the investment landscape by creating entire industries that didn't exist a decade ago. At the same time, innovations in blockchain, artificial intelligence, and machine learning are fundamentally changing how asset managers run their own businesses. Jenny Johnson, the CEO of Franklin Templeton, is embracing such change. In 2020, she took the helm at Franklin. She has since overseen 8 acquisitions aimed at positioning the company for the future. As head of client business development at Morgan Stanley, I wanted to learn more about how Jenny thinks about the industry's next frontier. So I visited Franklin's offices in New York. Jenny, thank you so much for having me today. I think your career has been so inspiring, but especially in the last couple of years. I do want to start at the beginning of Franklin really being a family business, and your grandfather founded it in 1947. Your dad was the CEO. At what point did you realize you were also going to be in the business?
I felt like I would always be in the business. I'm not sure why, but I always felt like that was going to be my path. All of the family members worked in it at some point, but it was really my 2 brothers and me that really stuck with the career there. As far as becoming CEO, I don't think it wasn't necessarily something that I aspired to do as much as just contribute to the business. What happened really is my brother had been CEO for 15 years and he had a chance to be the control person of a Major League Baseball team. I think that's probably a lot of guys' dream job. And so I'd run every part of the business and it made sense to, kind of do the transition.
So you joined in 1988. I'd love to hear about what your first job was.
I was executive administrative coordinator to the COO. So I did whatever I was sent kind of to do. We no longer have a bank, but at the time we bought a bank. And so I actually then ran a credit card business and an auto loan business. So I know probably more about consumer lending than anything else.
So 34 years, when I do the math, that's a lot of time in the industry. There's been a lot of change. And when we look at the past decade in particular, it's actually sped up. So what do you think the most important evolution has been in the past 10 years?
It's probably around understanding risk factors that were not traditional risk factors and how people thought about portfolio construction. And I think the fact that the industry has gotten a lot better at that. The other is really personalization. I think that actually is going to be the great disruptor going forward. We're just going to be better and better at delivering portfolios based on people's goals.
We've certainly seen a lot of disruption in the industry. You've often said that blockchain is one of the biggest disruptors.
So I think it's important to just understand that blockchain's a technology and it's pretty efficient. A transaction can happen with embedded trust. There are many roles that people have in financial services that validate so that if you and I transact, you can count on it. A title company helps to ensure that there's property, investment bankers doing certain things around making sure that the ownership is transferred appropriately. Blockchain allows it to be embedded with a smart contract in the code. And a token is just the code that says, when I transact it to you, you can count on a lot of those things being embedded. I often say Bitcoin is the greatest distraction from the greatest disruption. If you're going to debate currencies, it's almost a bit like religion. If I believe and you believe, we'll convince each other it's great. If you believe and I don't believe, I'm not sure we're ever going to get there. My view tends to be governments will always want to control their currency, so it'll never get so big to disrupt that. The exciting things are around the disruption that's going to happen in business models. We talk a lot in our industry about the democratization of alternative investments. There's a real challenge today because as companies are waiting longer to go public or banks have much more stringent capital requirements, you're seeing private credit being created and obviously private equity, 5 times the number of privately backed companies since 2000 and half the number of public companies. So if you think investable universe, how do you responsibly bring that to the mass affluent? Yeah. Well, tokenization, because it's going to create a greater fractionalization of ownership. And I think you're going to start to see these markets for it. I think it becomes a really important part of the democratization of alternatives.
There's obviously a lot going on, and you could sort of put your chips on a lot of different things. How do you think about that?
I think about it exactly that way, which is our job is to put our chips on a lot of different things because we don't really know. If you look in history, often the best technology doesn't win. I mean, we're a public company, but my family's still very much involved in an ownership position. So I think in terms of generations, right? And what's going to be the biggest error is that we miss some great technology disruption. So we are all about trying to understand the waves of disruption. We have an incubator in San Mateo. We have an incubator in Singapore. We've partnered with a company where they look at about 100 startups, bring us 20, and we invest in probably 1 in 20, bring them into our incubator. So the incubator's one. We have our own balance sheet, which we invest in companies. We have a lot of different initiatives. It's hard to get blockchain programmers. Yeah. So we've actually partnered with some colleges to create contests for students in blockchain, and there may be some interesting investment opportunities. But two, we find the kids in school who are interested in blockchain that we can maybe then hire and bring into our ecosystem.
So speaking of optionality and being very strategic about the business, you become CEO at the beginning of February of 2020. You then announce a week later that you're acquiring Legg Mason. And now it's 2022. And since you've become CEO, you've acquired 8 companies. So talk to me about your acquisition strategy and how you think about it as an organization.
We wanted to make sure that we have a very diverse capability to be able to bring anything to the clients, like be the all-weather manager. One part of the strategy is filling in investment capabilities that we haven't had. Legg Mason was terrific in that it brought us 2 key capabilities. One was core plus fixed income, which we got with Western Asset Management. And the other was real estate with Clarion Partners, an $85 billion real estate manager. So that was sort of starting to fill in some of those gaps. Today, we feel like we have a really terrific suite of private alternative investments. The second area is we think that technology is being very disruptive, particularly on the financial advisor side. There's tremendous pressure, which I think is a good thing, for the advisors to deliver more customized solutions. So we invest in fintech companies that we can then bring that capability to an advisor to build a deeper relationship. So that's a type of example where we'd want to be able to go in and talk to our partners and say, hey, not only do we have these great investment capabilities, but we also have technology that can be, useful.
How do you keep the culture of feeling like a family while also solving for your shareholders and your clients?
When you do as many acquisitions as we've done in recent years, you have to make sure that, frankly, part of the process of acquiring is assessing the culture. The investment banker will tell you, here's why it's a great strategic fit, here's why it's a great price. They don't talk about culture. I think deals fail or succeed based on whether there's a cultural fit. So it's very important to us. In the asset management business, what are you buying when you're buying a company? You're buying people and an investment process. And we've always been very comfortable leaving that independent. And then at the center, finding opportunities for greater collaboration. So here's an example. Actually, before the deal closed, so of course, March 2020, COVID hits, US Treasuries, the most liquid asset class in the world, freezes up. We're able to pull together a call with Ken Leach, the head of Western, our fixed income team at Franklin, David Hoffman from Brandywine, and Tom Gann from Private Credit, right? And we just put them on a call, and they started talking about what they were seeing in their areas of the market and what they were thinking about. And so that's the type of thing where if you can add value at the center, people stay connected with each other. I have to tell you right now, our Franklin fixed income leader and Western have had very different views on inflation. They talk pretty frequently to get the benefit of somebody you respect who has a different view.
How do you make sure integration is successful?
So, it's funny, years ago, I remember we were coming up with a mission statement and core values. And I was like, this is the dumbest thing in the world. And what I realized is, as we have clients in 160 countries. We have offices in 30 something countries and over 100 plus offices, that actually you need to ensure that the corporate culture transcends any local culture. And so what I always say to people is, listen, if you're ever debating a question, go straight to our corporate values and run the two choices against them, and whichever most aligns is going to be the right answer. And so I think if you live your values from the top down, then actually people realize that that's what the standard is, and it's really important. We are big believers in advice. We are big believers that people should have a financial advisor. If you look at the fundamental mistake that the average investor does is that they sell low and they buy high, right? And what the advisor does is, and that's because it's so emotional. In a 20-year period between 2002 and 2021, there are 5,035 trading days in that window. If you put $10,000 in and you got the S&P return, you'd have about $65,000 at the end of those 20 years. If you missed the 10 best trading days, you lost 65% of your return.
Obviously, people are our most important asset. Talk to me a little bit about how you think about attracting and retaining talent. You and I have seen Wall Street change dramatically. It has definitely become a more inclusive environment.
Well, first of all, I think just bringing your authentic self, anybody who feels they have to hide something, they're spending a certain amount of their mind share and their energy on hiding something about themselves. And so you're never going to get the full 100% focus. The diversity component, I think, is so important in this industry. And I become even a bigger believer that it's part of the growth story here. So less than 2% of venture capital goes to women. Mm-hmm. So you have 50% of the population getting less than 2% of the dollars going there. And the women who were entrepreneurs who are turned down will tell you I was turned down because the VCs didn't understand the idea that I had. Franklin backed a company called Rent the Runway. For women, you can't wear the same dress to formal events publicly. Like there's pressure on women. I mean, it's sort of silly.
I feel the same way.
And yet, you know how expensive those dresses are, right? So you say, I have an idea. People are going to rent the dress, right? Now you're talking to a bunch of venture capitalists who's like, rent the dress. I've got the same tuxedo for 20 years. I just got to make sure it fits. It's, not a big deal.
You grew up in a family business and you have 5 kids of your own. Yeah. Have any of your kids expressed interest?
I always kind of laugh and think, boy, I must be a failed, spokesman to why this is such a great business. And I tell the story about how, so I have 2 sons and 3 daughters and, said to my kids, so is anybody going to follow me in this industry? And the thing that I'm really happy about with my kids is they are passionate. They picked hard industries and they're passionate about doing it. And I always say there's 4 P's of leadership: people, passion, purpose, and persistence. If you don't get your people right, you're never going to be successful. Passion, love what you do and you'll never work a day in your life. Purpose, if you can describe why it is that you're passionate about it in a purposeful way, you will inspire people to follow you on that mission. And then persistence, guaranteed you're going to fail. And so I think a lot of times the difference between success and failure is how well you fail, stand up, dust yourself off, and get right back in the game.
It's amazing what you've accomplished in just such a short period of time. And you are a clear representation that passion leads to success. So thanks, Jenny. I appreciate your time today. Thank you.
Thank you, Tracy.